Part 1. Analysis of the video's appeal and success. Before deconstructing the content, it is vital to understand why this narrative is so effective. Its success is not built on complex data, which is almost entirely absent, but on a masterful deployment of persuasive psychology and narrative structure. 1. The universal hook, fee gold. The video opens with gold, $4,500. Gold is not just an asset, it is a primal symbol of value, fear, and history. It immediately anchors the viewer to a topic of tangible emotional weight, bypassing intellectual skepticism. 2. The creation of an in-group. The narrative cleverly divides the world into two groups. The Jamjong, the crowd, who are confused and chasing the peak, and the Ngoy Hiu Biet, the knowledgeable, who are Amtam, silently making the next move. This makes the viewer feel like they are being initiated into a select, intelligent in-group. 3. The power of pattern recognition. The speaker establishes a simple, powerful historical pattern. 2008 gold peak to 2011 real estate stock boom. 2020 gold peak to energy commodity boom. This simplifies a chaotic history into a seemingly predictable 1-2-3 cycle, providing the audience with a sense of order and forecastability. 4. The FOMO, fear of missing out. Catalyst, the video is built on urgency. Phrases like no tajen muon, if we arrive late, and chuki kongcho ai, the cycle waits for no one, are potent psychological triggers. The core message is not just, here is an opportunity, but here is an opportunity you are already missing. 5. The identifiable prime mover, the Fed. The video does not present the cycle as a random occurrence. It identifies a clear, singular catalyst, the U.S. Federal Reserve cutting interest rates. This provides a villain, or at least a clear mover, and gives the entire thesis a single, understandable cause and effect mechanism. 6. The consumable list structure. The promise of 5 types of assets is a classic, highly effective content structure. It gives the viewer a clear roadmap and a tangible set of takeaways. Part 2. Key themes and core propositions. The transcript's central thesis is a classic asset rotation argument, predicated on a major monetary policy pivot. Gold as an indicator, not the end point. The core idea is that a gold price peak is not the end of the story, but the signal that a new one is beginning. It marks the climax of a flight to safety, risk-off phase, which is now giving way to a search for yield, risk-on phase. The Fed as the global catalyst. The prime mover is the U.S. Federal Reserve initiating a rate-cutting cycle. This cheapening of money, Von Ray, makes holding cash and bonds, Tiet Kiem, Tri Fiu, unattractive, forcing capital to flood into Tai San That, real assets. The sequential asset cascade. The video proposes a specific logical sequence for this capital flow. Phase 1. Silver as a monetary and industrial metal. Phase 2. Energy, oil, gas as the fuel for recovery. Phase 3. Real estate as the primary beneficiary of cheap credit. Phase 4. Bank stocks as the engine of credit expansion. Phase 5. Industrial metals, copper, lithium, as the building blocks of a new industrial and green phase. The real asset, VAT chat. Thesis. A major theme is that the next cycle, 2025 to 2026, will favor tangible, physical assets, commodities, land, industrial materials, over the intangible, digital assets, like tech stocks, that dominated the previous cycle. Part 3. The Great Rotation. An economist's monograph on the post-gold cycle. The following is the rewritten academic analysis as requested. The Mirror of Midas, reading the capital flows in gold's reflection. There is a fetishism surrounding gold that spans millennia. We are drawn to it. We assign it value far beyond its industrial utility. But in the modern, fiat-based global economy, gold's primary function is not to be money, but to serve as a mirror to it. When the price of gold reaches a parabolic peak, as the transcript notes, the Jamjong, the crowd, fixates on the object itself. They ask, will it go higher? They ask, is it the top? The adept economist, however, understands this is the wrong line of inquiry. The real question is not what the mirror is, but what it is reflecting. A gold peak is a fever. It is the symptom of a profound systemic crisis of confidence in the purchasing power of sovereign currency. It is the final panicked act of capital fleeing a risk-off environment. But as the speaker correctly identifies, it is never the end. It is the prologue. We are, at this moment, standing at a pivotal inflection point in the global credit cycle. The high interest rate environment orchestrated by the U.S. Federal Reserve to combat the inflationary excesses of the 2020 to 2022 period is drawing to a close. The narrative now shifts from contraction to expansion. This pivot, the Chu Ki Halai Swat rate-cutting cycle, is not a minor adjustment. It is the rewriting of the planet's financial gravity. When the world's reserve currency hegemon declares that the price of capital will fall, money must move. The transcript's observation that Tian Se Hong Jung Yen, money will not stand still, is the single most important law of modern finance. It is the principle of capital velocity. What the provided transcript lays out is a logical, sequential map of this coming capital migration. It is the story of the great rotation from fiat safety to productive risk. Phase 1. The monetary echo, silver. The first asset to move is logical, silver. The speaker calls it Ngoy An Em Tam Lang, the silent brother. Academically, silver's movement is driven by two distinct forces, making it the perfect transition asset. The monetary force, the gold-silver ratio. The speaker notes a ratio of 85 to 1, 85 ounces of silver to buy 1 ounce of gold. Historically, this ratio has fluctuated wildly, but it often compresses during precious metal bull markets. A ratio this high is perceived by historical standards as signaling that silver is deeply undervalued relative to gold. Capital that feels it missed the gold run simply rotates to the cheaper, more volatile monetary cousin. The industrial force, the green engine. This is the more profound modern driver. The transcript rightly identifies silver not just as a store of value, but as Nian Liu Kwa Tuong Lai Shan, the fuel of the green future. Silver is an irreplaceable component in solar panels, photovoltaics, EV batteries, and all advanced electronics. Therefore, silver captures two waves. The fear trade, a hedge against currency like gold, and the growth trade, a bet on industrial recovery and the global energy transition. It is the bridge asset. When gold is bought, it is buried in a vault. When silver is bought, it is consumed by industry. The former signifies fear, the latter signals the first whispers of recovery. Phase 2, the lifeblood of recovery, energy. The next logical flow is into energy. The transcript aptly calls oil the Mak Mau Kwa Kin Te Tuan Kau, the lifeblood of the global economy. No economic recovery, no factory reopening, no logistical supply chain can function without a massive front-loading of energy consumption. The speaker's link between falling interest rates and rising energy demand is a core tenet of business cycle theory. Cheap capital, lower rates, $ arrow incentivizes new manufacturing investment. San Swat Mo Wrong. New manufacturing arrow increases demand for energy and shipping. Increased demand, right arrow higher energy prices. Jia Dao Bat La. The thesis here is that we are in the early stages of a physical reindustrialization of the global economy. After a decade dominated by intangible, capital-light digital economies, social media, software, the next cycle will be defined by tangible, capital-heavy industry. Onshoring, robotics, advanced manufacturing, and the rebuilding of global supply chains. All of this requires staggering amounts of energy. The intelligent investor, as noted, is not waiting for oil to cross $100. They are investing during the trough, understanding that the policy, Fed cuts, is the leading indicator, and the price is the lagging one. Phase 3. The domestic engine, real estate and banks. As the monetary pivot solidifies, capital cascades from global commodities into domestic, credit-sensitive assets. This is the real estate and banking phase. The mechanism is simple. A falling interest rate environment is a direct subsidy to leveraged assets. Real estate, Bat Jong San. The cost of a mortgage, Chi Fi Von, is the single greatest driver of real estate prices. As rates fall, borrowing capacity expands, and capital trapped in low-yield savings accounts, ROI Koi Tiet Kiem, seeks a tangible hedge against the inflation that rate cuts will eventually foster. This is the Kon Song Thu Hai second wave. Crucially, the transcript distinguishes between productive land, Jat Ko Gya Try That, Ko Ha Tang That, real value, real infrastructure, and speculative land, Jat Chi Ton Tai Tren Banve, land that only exists on paper. This is the key analytical insight. A healthy cycle is driven by investment in industrial parks, logistical hubs, and urban satellite zones, Jat Vendo, not by speculative, non-productive bubbles. Bank stocks, Ko Fayun Gan Hang. Banks are the Kwa Ngo Kwa Dong Tien, the gateway of capital. Their role is twofold: profitability. While falling rates can initially compress net interest margins, NIMs, this is rapidly overcome by a massive expansion in loan volume, Tien Dung. Banks are the business of selling money. When the cost of money falls, demand explodes. Confidence. In emerging markets especially, like Vietnam, where banks are greater than 30% of the index, the banking sector is the ultimate Phong Vu Bu barometer of market confidence. A rising banking sector signals that capital is flowing, credit is expanding, and the domestic economy is functioning. Phase 4. The materials of a new world, industrial metals. The final phase of the rotation is into the base materials of the economy itself, industrial metals. The speaker wisely singles out copper and lithium. If gold is the symbol of safety and oil is the symbol of recovery, copper is the symbol of growth. Copper, Dr. Copper. So named by economists because its price is a world-class predictor of global GDP growth. It is the metal of electrification. You cannot build a motor, a factory, a power grid, or a data center without it. A rising copper price signals that the world is not just recovering, it is building. Lithium, Vang Trang, white gold. This is not a cyclical play, it is a structural, multi-decade transformation. Lithium is the soul of the modern battery, the linchpin of the entire EV and energy storage revolution. The investment thesis here is that we are rotating out of an economy based on information and into an economy based on physics. The world is being electrified, and the picks and shovels of this new gold rush are copper, lithium, silver, and the energy required to mine them. The speaker's observation that institutional funds are gom hang, accumulating these assets, just as they did gold before 2020, is a classic example of institutional front-running of a major structural theme. A philosophical conclusion: the investor versus the speculator. This entire transcript is not truly about 5 assets. It is a philosophical treatise on time and patience. The speaker draws a sharp line between Jiao Ko speculation and Jiao Tu investment. The speculator is consumed by price and emotion. They are part of the Jam Jong. They chase headlines, arriving late to the gold peak, driven by euphoria, hititruong on ao, and panic, gigya gyam. The investor is concerned with cycle and logic. They are the Ngoi Hyo Chu Yen, the one who understands. They operate with Sukien Han, patience. The transcript's profoundest message is that wealth is not built by guessing the peak or the bottom, Joan Gia. It is built by understanding the direction of the flow, Hiu Tien Di Chu Yen Rasao. This requires a fundamental separation of emotion from action. The market is a sea of human psychology: greed, fear, panic, and euphoria. The successful economist or investor is not braver or smarter. They are simply more disciplined. They are Kien Jin, steadfast. They do not fight the cycle, Chong Lai No. They ride it, Ji Chung Dong Nuoch. The 2025 to 2026 period, as framed here, is a Song Giao Ben Vung, a wave of sustainable wealth, precisely because it is predicted to be a return to Tai San That, real assets, a return to things of tangible, physical, productive value. The gold peak at 145 million Vietnamese dong was not the end. It was the Dao Fei, the comma. It was the bell signaling the end of the fear chapter and the beginning of the rebuilding chapter. The only question that matters is whether one has the clarity to read the new script and the patience to wait for the story to unfold.